I'm here with Ian Martion today, Chief Investment Officer of XTB. Want to cover off three things today, Ian. So firstly, thoughts on employment data, RBA, where are they going to go, the election. I want to know about bonds and is everything priced in, and then finish up with a bit about BBSW and general market conditions.
Okay.
So firstly, employment data, what are your thoughts?
So despite the fact that the employment data that came out yesterday was statistically in line with averages that we had seen, the RBA had told us that they're looking for improvements in the employment environment. So they did not get that sort of improvement there, and then that would support their easing bias. So they told us they want better employment data to come through, otherwise they would cut. So the market has therefore moved to assuming and reinforcing the fact that cuts will occur.
Okay, and we saw NAB come out today as well. They were previously thinking the first rate cut was going to be July and then September. Now they've moved that into June and August. Is that too aggressive for you, or are you?
Look, I think that's a bit aggressive for me. I think there's a couple of steps. I mean, the RBA historically have shown caution in this type of approach. And I think they will come out and, as other commentators have made the point, adjust their forecasts, prime the market, and so I don't think you get cuts before August, and then you maybe get one or two.
Okay. And election this weekend, is that going to play into any of this?
Look, the markets do not like uncertainty, and when you have uncertainty, people price in risk. So it will probably help the financial conditions post the election, but apart from that, I think we'll continue on the same mode that we've been in.
Okay. Bonds being priced in, so I'm getting a few questions from clients basically saying, yeah, okay, we know that there's going to be rate cuts, everyone knows that now.
Yes.
Is everything priced in, or can I still make some money here?
Look, certainly bonds have had a very strong year and strong performance, but what people should remember is there is a bias in the markets for supporting the bond market. Markets around the world are very focused on trade wars and the risk to growth. They think central banks are looking to move in downward directions, which is supportive of the bond market, including the Federal Fund, the Federal Reserve, and here in the RBA. So we're in a very supportive bond market. So you still get carry, you still get the yield to maturity every day that you own a bond when you buy it.
Okay. We've been watching BBSW pretty closely. It was up around 2, over 2. Now back quite substantially. What are your thoughts on that, and how's that going to play into deposit rates?
So the bank bill swap rate, or BBSW, being the rate at which banks fund themselves in the wholesale market, is very important. And as you said, it's come down from 2 towards 160. That reduces the cost of funds in the wholesale market. And when you get that reduction in cost of funds, you often see reductions trailing in deposit rates. So I expect deposit rates to continue to come down.
All right, thank you.